Hello and welcome to Flagstaff TV. Today we're joined by Daniel Slater, who is an energy analyst at Zeus Capital. Daniel, thank you so much for joining us today.
Great pleasure. Lovely to be here.
Daniel, how would you characterize the sound energy investment case?
For us, what we like about Sound is the fact that in their Morocco portfolio, they've essentially got, to an extent, the full cycle of an E&P company. So they've got production that's going to be coming online in the middle of next year. They've got ongoing development and a much larger development project to do when they bring Tendrara Phase 2 on. They've then got exploration across their acreage, in particular the 2 exploration wells that they're going to be drilling next year on the back of the farm out that they've recently done. So you get all of that. You get upcoming production, ongoing development, and exploration all in that one portfolio. That's what we particularly like about it. We also like the fact that it's an onshore location. That's really helpful for a smaller company. It means they can control their costs, but it also means that they can develop their project in a modular fashion. They don't have to do it all at once. And again, that's better for funding. We know they do have a reasonably sizable debt piece on the balance sheet at the moment, but the way we feel is as they're able to develop their project, as they're able to ramp up their cash flows, that ought to be able to be paid down and controlled reasonably well. So you've got that interesting portfolio. You've got the various different E&P elements that it represents. You've got a large amount of funding that they have now secured, both via the debt facility for Phase 2 and the farm out that they've recently announced. You've got the ability to control and pay down that balance sheet. And you've got a management team that's been able to put all that together and drive that through. That's really, for us, the sort of touch points of the investment case.
And how has Sound Energy developed its business case over the years?
I think that's really quite important because Sound, a number of years ago in the sort of mid-2010s, was very focused on exploration, trying to make large discoveries, etc., etc. And they did well to delineate the Tendrara asset. But I think what many investors haven't necessarily caught up on quite yet is how much progress they've now actually made with that asset. So from being a gas discovery essentially in the middle of the desert in Morocco, they've proven that up to the point where they can develop it from a sort of geological and engineering point of view. They've secured the offtake, both for the initial project and for the larger Phase 2. They've secured a pipeline connection, and now with the debt facility and the farm out, they've secured funding. So they're on the cusp now of really being able to drive those forward, really drive some value out of those assets. And I think that's what they've done over the past few years, and I think it's quite important and interesting for them to get across. That's what I think they've achieved, and I don't think that's fully appreciated in the stock market just yet.
Now, how significant is the recent management farm out?
I think that's a very good question, and I think it's very important. In many ways, it's one of the last pieces of the puzzle to allow them to drive that value and really realize a lot of the pent-up value that they've got in the portfolio. Having got together the Attijariwafa Bank debt facility, that was very important. But what the farm out does is it allows them to round out that equity capex piece and be fully funded for Phase 2 and for Phase 1. That's really important, especially for a smaller E&P company. Funding isn't always the easiest thing to find these days. And so the fact that they've managed to put that together, the fact they managed to get that farm out is incredibly significant for monetizing the existing discovered resource. But alongside that, what they also get is funding for a couple of exploration wells next year as well. So it supports that wider investment case of inhabiting all those elements of the E&P life cycle, while also giving them that building blocks for that really important funding that they need to get Phase 1 finished and get Phase 2 over the line through FID and into development and really realize that value that's pent up in the portfolio.
Daniel, what are the attractions for a small cap oil and gas company of doing business in Morocco?
Well, as I've already mentioned, because for Sound they're onshore, they get all the cost advantages and all the sort of modular development advantages that those bring. But those are typical for any onshore play. But the particular things you get in Morocco, one, for a gas player like Sound and some of their peers, Morocco is in significant supply demand deficit for gas. They were getting an awful lot of their gas from Algeria. That's now stopped. They have gas-fired power plants. They have other industry, all of which needs that gas. They're having difficulties getting hold of it. So if you can produce gas and put it into the Moroccan market, you're well placed to access a nice deep pool of demand. So that's very attractive for them. So one, it's the supply demand for the gas. Two, it's the fiscal terms. Morocco, because they want to attract more domestic oil and gas activity, have some of the best fiscal terms that you get globally. You get a 10-year tax holiday, you get a limited royalty, corporation tax isn't all that high when it does kick in. So all of that is very attractive, and that increases the value of those barrels in the ground because you have those very favorable tax terms. On a global basis, they are very favorable. You also have a supportive government. That's very helpful too. Again, part of the reason the tax terms are where they are is because Morocco wants more domestic E&P activity. So they are helpful when it comes to helping you progress approvals, offtake contracts, pipeline connections, things like that. Yes, there's always a process that needs to be gone through and all the bureaucracy that you would expect in any jurisdiction. But broadly speaking, the government is supportive of more E&P activity in the country. So you get the onshore location, you get the gas demand, you get the fiscal terms, you get the government support. All of those things are very attractive for any company and any small cap E&P company acting and, operating in Morocco.
Now, as Sound's Morocco business is advanced, could we see the company broaden its business with new assets outside the country?
I think it's possible that we could, yes, in time. I think at the moment, what management is focusing down on more than anything is closing the farm out, closing the debt facility, getting phase 2 feed completed, getting that through FID, drilling those 2 exploration wells next year, and also completing phase 1. So at the moment, just now, they do have their hands full with the existing portfolio. However, under the Managem farm out, they are going to be handing over operatorship. And what that's going to mean is, while we know Sound Management will stay fully involved in the development, in all the JV meetings, adding all their input to all of those things, eventually, as those duties get more and more passed over to Managem, there will be more management time available. And we would expect part of that to be spent on the potential for new acquisitions. What could those look like? It's hard to say, but we would have thought, given where they are at the moment, North Africa onshore, it's quite a good place for a small cap E&P company to be. And so we would have thought that's the first sort of place that the company might look, were they to be looking at any new acquisitions. And if they were to bring forward any new assets, clearly you get all the portfolio diversification benefits that you would get from adding those in. So it could be very interesting for them in time. It's something we're sort of looking out for in the coming years.
And what sort of news can we expect from Sound going forward?
I think in the very short term, what we're looking for is closure of that Managem farm out. It's going to take a few months to get all the various approvals in and get it all signed, sealed and delivered. But when they do, they get a decent chunk of cash for those back costs, which is going to be very helpful for them. And what we then expect is that phase 2 development to enter the FEED, the front-end engineering design process, all going into, hopefully, FID about this time next year. That's what's happening on phase 2. On phase 1, we're expecting further development updates over the rest of this year, going into first gas sales sometime probably towards the end of the first half of next year. And that's going to mean first revenues for the company. And then also next year, we're expecting those 2 exploration wells, which are being drilled nearby Tendrara. So we'll actually have some high impact exploration catalysts coming through as well. So it should be a busy time for the company over the rest of this year, and then operationally, particularly as you get into next year, the first half and then the second half.
And how do you value Sound Energy shares?
What we've done is we've built a NAV model, which involves, it's our standard approach for E&P companies. It involves building models asset by asset and then summing up the values together. So where we have it on our valuation, just the Tendrara phase 1 and phase 2 less the net debt, that gets us to 2.3 pence per share. We then add another 1.6 pence per share risked for the exploration, and that gets us to our total risk NAV, or our target price, of 4.0 pence a share. That's how we view it.
Daniel, finally, for today, what message would you leave investors with on Sound Energy?
For me, the most important thing about Sound at the moment is the business has turned a significant corner. Firstly, over the last few years, as they've taken the Tendrara discovery all the way through to getting towards first gas sales next year, and then developing phase 2. That's a real change for the company over the past few years, from what at one point was really an out-and-out explorer to a company that's now pretty much within 12 months of its first revenues. So it has turned a corner over a number of years, but it's also turned a corner over the last few weeks by announcing the Managem farm out. That really is and should be one of the last pieces of the puzzle that they need to really extract the value from these assets, to sign off FID on phase 2, to complete phase 1, and to underpin those exploration wells next year as well. So the farm out, really, if there's one moment for the company over the last few years in really being able to push forward and become a much bigger company than what they have been over the last few years, that is it. It's the farm out and how that has really changed the game for the company and represents quite a significant achievement for them.
Daniel, thank you very much for your time today.
Not at all. Tremendous pleasure. Thank you so much for having me.
And thank you for watching Flagstaff TV.